Hello. What's up, guys? Hope everything is going good with you. So, I'm going to start a new playlist of backtesting model 2022. Okay? I'm gonna tell you guys why I'm starting this backtesting and share it with you. Well, firstly, since I just watching the 2022 mentorship, I decided there, beginners like me and you, to start improving them backtesting and get over them insecurity to benefits from, and also for me I benefits from journaling and many other stuff. So by you also just watching my videos, you will get this visual practice. So I think that you will get used to only by watching your inside of your brain, your unconscious brain. So what you should do, well, to be honest, nothing. If you think this series will help you, I'm glad. If you don't think so, it's okay. It's your choice after all. Secondly, why I did turn off the comment section, because to be honest, I don't care about your opinion if it's good or not for me, or I don't know, whatever the rules are broken or anything else. If you have a question or something, I believe 100% that you're gonna find it in ICT 22 mentorship, okay? You did cover all the stuff. By also watching me only, it won't just help you, okay? You need practice, you need to do backtesting by your own hands, and yeah, my I will only help you at the visual practice. So yeah, that's it. And who is it for this model? Well, for the guys that are searching for trading the futures New York EM session, and also I'm gonna use as pairs, I'm gonna use NASDAQ, S&P 500, and the XY, which is the dollar indicator. I won't trade it, of course, but as a measurement, that's all the three pairs I'm going to use. So let's go over the second slide. How I do this, how I use this model. Well, for our first thing, for we can trade this model, and it's really important thing, because without it, we're gonna be lost as hell, which is the daily bias, okay? The bias will be based from two things, the order flow and the narrative, okay? The bias also is based from order flow, what you guys are calling it the structure. And the narrative, we're gonna use a lot of things like the market efficiency paradigm, which is like answering those two questions. Let me show you. Sorry. Uh, the market, is it willing to go from imbalance to rebalance or target stops? That's it. That's how actually market works. Beside, of course, the what they call it accumulation, inflation, distribution, or other what they call it IPD array. So yeah, what they call it consolidation, expansion, retracement, reversal. So yeah, by doing the narrative, we're gonna use all those tools. Okay. The fair value gap, all high and low, SMT, premium and discount, intermarket analysis, okay? All of those PD arrays are going to help us. We can use some extra PD arrays that are order block, breaker block, rejection block, etc. But the main ones are going to be this, okay? So let's go for the next slide, which is going to be after knowing our bias and defining it based on from those two things. We're going to go to 1 hour time frame. We're gonna highlight the dull and also highlight swings low and highs and P arrays that actually matter for us. We may make some retracement from them, and yeah, 15-minute time frame. That's our secondly important time frame that we're gonna like highlight all this stuff, the highs and lows, of course, and target the sell side liquidity or the liquidities we're going to target, the fair value gaps and other stuff. And we are also going to highlight all those three sessions for us. Firstly, the midnight open, because we're going to use, I forgot to add here, the power of 3, okay? Because of course we're going to use the power of 3, which is accumulation, manipulation, distribution. It's going to be based from this time frame, midnight open and EM session open, okay? So as example, if we're going to be bearish, we do like to see the price above this 8.5, okay, or midnight open, and that's it. And for the New York Exchange Open, which is when the market stocks opens, we got a lot of volatility in it. So it's like better to highlight this time because we're probably going to use this to target, as example, sell side liquidity to go buy, you know, or whatever. So the 5-minute time frame. Here we're also gonna highlight swing highs and lows, fair value gaps, and other stuff. Once we do actually take any swing of the 15 minutes time frame or 5 minutes time frame, we're gonna strictly go to 1 minute time frame. Here is our entry setup, and we're going to use it to enter. Okay. As I said, here we all use it after getting swing high if we're bearish or swing low if we're bullish. Once we check those liquidities, we want them to be above the midnight open EM open since we're power of 3 this model. A plus setup is when deep premium and we want from to sell and to know blah 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 blah. So the A plus setup I just want to mention is when we're above, as example, the midnight open and the EM session open. That's what I do call it the golden dish. Okay, because if we're above, we're so deep in premium, and that means we're gonna have really high risk to reward trade. And for the market structure shift, as of course you all guys knows the ICT 2022 entry model, which is liquidity sweep, market structure shift, displacement, and yeah. The thing is, once we check the liquidity sweep, which swing that we're gonna count as a market structure shift. For me here, this is where it comes the personal preference is I do choose the internal swing, external swing instead of internal. As example, this one makes a break of structure, and we did make a retracement, we didn't make a break of structure right there, and also break of structure. This swing right here, it's internal swing, it didn't make nothing. It makes a good retracement, but it didn't break any of those lows or highs, so I will count it as a internal swing. I will only take the market structure shift with the external swings. Okay, as example, we did check the liquidity sweep and market structure shift. There is a fair value gap, and I will enter with it. So yeah, intro model is clear. 22 model. Once we get the all swings, we got the 1 minute time frame. Yeah, that's why I did just explain. So let's go for the next slide, which is trade management. For the trade management, guys, my max risk per day, once I reach it, I will stop trading, okay? Which is 1% of my account balance. The second one, the max open risk, is 1.75%. You're gonna say, oh no, that's more than 1%, and I'm not counting correctly, blah, 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 whatever. Man, listen, once I reach 1%, I don't care about other open trades, I will close them, whatever. Okay, so I only open as example, let me show you the 1%. I did make some small placement or ranking right here. The 1% risk, it's going to go for the 1 plus setup, which is with the high daily bias, taking premium liquidity, vice versa, above the EM range, midnight open range, entering the premium fair value gap on the swing that made market structure shift. The 0.5% setup in equilibrium. So yeah, that's the thing. And also I make another easier ranking. That's for what they call it. I'm sorry. Yeah, so that's for pyramid technique, okay? Backtest with me, that's our serial name, B.W.M, ICT 22 model. I will backtest this model in 2026, of course, so to be up to date, and you guys can see, double check if you guys miss any entry in your backtesting. Anyways, so first trade, which is A plus setup, it's going to be 1% risk. Second trade, 0.5, third, 0.25. That's where it comes. The max open risk is 1.75%. So yeah, I can enter with 0.5 setup or 0.525 setup. It's based on where I did enter from all those rules, okay? So let's come to the last slide, which is when to not trade. Of course, after not taking the 15 minutes or 5-minute swing, once we reach 1% of the account balance, when we reach the daily goal, inside news, of course, we all this and not trading against the bias. We always want to be high probability, okay? So once we did actually reach the goal, we don't care about what happened. If I did enter or not entering, I don't care. We did reach the goal, I will stop trading. Inside news, of course, there's a lot of volatility there. We're not a gamblers. The fifth one, after reaching the New York lunchtime, which is 12, when we've not above 8.5, yeah, that's for A plus setup and not change our bias in the middle of the day. That's one of the rules that I want you guys to stick on, okay? Stick with one bias, don't let the market play with you. Make your analysis, and once you decide which bias you are, then go for 1 hour time frame. That's it, guys, for today. So I'm going to start our backtesting, and I'll make sure when I'm defining the daily bias, I'm gonna tell you guys. And just for you know, guys, I'm using the TTR daily bias with also the rules. Let me show you. With the rules right here, I'm showing you. Narrative and order flow, all those things are helping me to define the bias, okay? And also the DXY, which is the dollar index. So that's it, guys, for today, and see you for the next episode.